Southern California, welcome to Money Matters with Dino. Saturdays from noon to 1, right here on Power Players Radio, KTLK AM1150. Do you own a home or have plans to in the future? You'll get all the information you need to know about what's happening in the local real estate market and how to take advantage of that knowledge. How to approach home ownership or mortgage financing with design, vision, and focus, as well as accurate information. Whether you're buying, selling, or investing, listen to Money Matters with Dino, right here on Power Players Radio, KTLK AM1150.
Welcome to Money Matters with Dino on KTLK AM1150, the most important hour of radio for Southern California every week. I'm Dino Katsiametis, and I'm your host. I want to thank you for joining today's conversation. Sounds like a bold thing to say, the most important hour of radio. But if you're new to our show, you'll see that our goal is to teach you how to become real estate wealthy. How do we do this? We seek out top professionals in our market, learn what their years of experience have taught them. Now, I know real estate, and I have knowledge in some other fields, but I don't know everything. Nobody really knows everything. So on this show, I bring you respected professionals that are experts in their fields because it's critical to me that I provide you with accurate and educational information that applies to you, and I take that very seriously. Before I get into what we have in store for you today, I want to give you some great advice that you won't hear anywhere else. Stop worrying about interest rates. Why? Because everyone has great rates. They're the lowest they've ever been, and we all have access to them. Don't make the mistake of playing the right game. Having a good team with the knowledge to navigate this crazy but amazing market will save you and make you more money than anything else. Now, again, that doesn't mean you can't get the lowest rates. We have them, but that's not what you should be focusing on, especially as an investor. This is why I do the show and why we decided to call the show Money Matters. My expertise is in growing and managing wealth using the vehicle of real estate, and I see too many people missing opportunities to become real estate wealthy. Having decades of experience and extensive knowledge in helping people with their real estate needs, as well as my own, has convinced me that real estate is still, by far, the best way to grow a steady and secure portfolio of wealth. Now, that's not the only reason we call the show Money Matters. The other, and I think the greater reason, is that money affects your quality of life. Every financial decision you make will affect where you'll be able to go for dinner, how you'll spend the holidays, and if you're a family man like me, it will mean where your kids will go to college, or even if they'll be able to go to college. Think about that. Every financial decision you make today will affect your quality of life tomorrow. Decisions that will affect what neighborhood you live in, what schools your kids will go to, if your kids will be able to play an organized sport, or even learn an instrument. I know that sounds silly, but it's not. All these things cost money. I know as well as anybody does, you don't want to say no because of money, but too many of us have to too much of the time. Money, when managed properly with the advice of professionals, will enable you to say yes, and understanding money, whether it's the stock market or real estate, will protect you from market volatility like we experienced recently in the past few years. Stay alert and listen up. I think you'll enjoy this show. Co-hosting with me today is my producer, Phil Giagrande. What's going on, Phil?
Couldn't be better if I were twins. How you doing?
Couldn't be better if I were twins.
That's my new one for this week.
Did you get that from Fonzie back in the day or something?
It's something he would have said, yes.
Well, hey, Phil, we have a great group here today. It's going to be extremely educational. We have returning, he's been on the show a few times, is James Perry from Alliance Portfolio and Gabrielle, Gilles, Vice President at Alliance, and also Brian Calderon, who does self-directed IRAs, which I'm really excited about hearing. Nobody seems to know anything about those.
No, and this is the first time we've had anything about that on the show, so this will be great.
Yeah, it's going to be great. And he's from Accuplan Benefit Services. In the next segment, our guest will join us in our discussion with our panel of experts, where you'll learn how to make money with private lending, as well as how to properly use self-directed IRAs, so stay tuned for that. As always, in our last segment, our Ask Dino segment, where Phil asks me questions that you, the listener, have either Facebooked us or emailed us. And these are like the everyday questions that people have that sometimes we just overlook. If you have any questions at all, get on Facebook or get on our website. It's Money Matters with Dino. Give us a call at 888-814-3335. That's 888-814-3335, or log on and send us your question.
Yeah, and this week they're actually pretty good. Well, they're always good every week, but this week they're really pretty specific. So you haven't seen them, just so everybody knows. I get to take the emails. Dino hasn't seen the questions yet, so he's, we're going to see what we can do.
Piece of cake questions, though. I guarantee it. But I will give you the right answer.
All right, we'll see.
So, Phil, what do we have in store today?
Well, one of the things that I was thinking about, we just had Valentine's Day, and I'm single but dating, and I'm starting to think, I'm old enough to go ahead and get married and have a family now.
Does that mean you're in love?
Yeah.
Whoa.
Yeah, maybe. Yeah. I'm actually going in that direction. So I'm like, cool. This is, we had a great time, and this is something I need to think about seriously, which gets me thinking about investing because, when you're a single guy, you don't. It's a priority, but it's not the priority. It is just sort of, you go along with your life, you make your money, and, whatever you put aside is great. That's great. I put that aside. But now, if I start thinking about, all right, maybe I want to be getting married in the next year or two, if I want to have kids in the next couple of years, I need to be prepared, and I am not for that. I am not. So, we've got these great guys on today this show is all about investing, and I want to know how somebody like me, who is, a middle income kind of guy, but relatively responsible.
I'll tell you how. I'll tell you how. My dad told me this a long time ago, and he was 100% right.
Yeah.
He said, son, don't worry so much about how you're going to make money. Because if I were you, I would go out and get married, and you'll see how you're going to start making more money. And if you want to make more money, he said, go have kids.
Yeah.
And you'll see how you'll find yourself making more money.
My dad said the exact same thing to me. And he's like, nothing focuses you like your wife getting pregnant. I'm like, all right, well, we'll find out, won't we?
I'm telling you, because my little boy is now 9 months old, and I already have 2 girls from previous, but my new little boy is 9 months old, and I got to tell you, man, I kicked it into high gear. It
really?
I mean, this overwhelming feeling comes over you that says you have to succeed, you have to make money, you have to provide. It's just what we do. Just like the mother, has a whole other set of rules, and she becomes this mother hen that is all about protecting her child. So, anyways, you're listening to. I guess, are we done talking about love before I go out of this?
Yeah, that's a bitter thing for you to say.
Huh?
Come on, now, we just had our big day.
Well, I know. I'm like you're in love. You might be in love. I don't know.
I might be.
You might be. Okay.
I might be.
Well, I certainly am. I had a great Valentine's Day, and before we go, I got to tell you quickly because I'm so proud of myself this year.
Yeah.
So I grew up in a Greek family, right?
Yeah.
My mom's English still, it sucks. My dad, he's great.
Wait a minute. What are you, an anti-Anglophile, I guess? What's going on there?
I'm getting to this point. So listen, here's the point. Growing up, when you talk birthday cards, Valentine's Day cards, Christmas cards, any of that kind of stuff, it's not about what the card says, because my mom really doesn't understand it. So when she buys us a card, it's about what the picture looks like. And when we buy my mom a card, right, because growing up, that's who you buy cards for in the beginning.
Yeah.
It's all about either how big the card was or how pretty it was. So there was never anything about reading the cards and finding the right card for the right person. And I got accused from my wife of not really spending time in finding the right card. So in my older age and, being a little more of a mature man these days, I decided I'm going to do a better job with that. I tried last year, but I got to tell you, when you get to the grocery store or Hallmark or whatever the heck you go to, hours before you're supposed to give the card,
bad idea.
You're not going to find anything worth meaning. Period.
Okay.
So I and honey, you got to hear this because it's the truth, and I know you don't believe me, but 2 weeks ago I went and found your card. And I sat there and I read at least a dozen cards until I found the right one.
Wow.
Is that love or what?
Did she love it? Was it the right card?
No, you know what? I still think it's human instinct when you open a card, you look for money or a gift card. if it's not in there, then you result to reading it and you act like it. So, yeah.
Right.
No, it was great. We had a great time. We had a fantastic Valentine's Day.
Nice.
So if you're listening to Money Matters with Dino on KTLK AM1150, we want you to pick up a pen right now and call us at 888-814-3335. That's 888-814-3335. And let us help you make the best real estate decisions for you and your family. That's 888-814-3335. Or you can check us out on the web at moneymatterswithdino.com. Coming up after the break, we'll be talking to our panel James Perry from Alliance Portfolio, along with Gabrielle Gilles from Alliance and Brian Calderon from Accuplan Benefit. While you're waiting, think about your financial goals and ask yourself, am I investing in a way that will make me real estate wealthy? Stay tuned. We'll be right back.
When it comes to purchasing or refinancing your home, turn to someone with experience, CHL Mortgage. It doesn't matter if you're a first-time home buyer, purchasing the home of your dreams, or refinancing. The team of mortgage specialists at CHL Mortgage provide you with superior knowledge and service. Their ultimate goal? Getting the highest quality loan at low rates. Their second goal? To create a lasting relationship with every client and continue to provide excellent service for years to come. If you're looking to purchase or refinance, call the experts at 888-814-3335. That's 888-814-3335. Get additional details at www.chl.cc or call their office at 888-814-3335.
Alliance Portfolio is a licensed real estate broker, California DRE broker license 01868859, NMLS 324460.
Are you looking to diversify or add real estate secured investments to your portfolio? Did you know that investing in trust deeds can provide a better return with better security than many other alternate investments? For over 20 years, Alliance Portfolio has been providing the highest quality mortgage fund and trust deed investment opportunities with first-class service and communication. Alliance Portfolio offers well underwritten loans, low loan-to-value ratios, and all secured by prime Southern California coastal community real estate. At Alliance Portfolio, we don't just lend money, we lend our expertise. Call 949-349-1322 today and let us know that you heard us on the Dino and Nelson Show to capitalize on a special opportunity. That's 949-349-1322. Investors, when our job is done, your job is easy. Sit back and capitalize. 949-349-1322 or text the word Alliance to 313131.
Welcome back to Money Matters with Dino on KTLK AM1150. If you have any questions for myself or my guests, or if you need help with your money matters, give us a call at 888-814-3335. That's 888-814-3335, or check us out online at moneymatterswithdino.com. This segment is brought to you by CDA Law Center, expert loan modifications with decades of legal experience in real estate. Joining us today in our discussion panel with the experts is James Perry and Gabrielle Gilles from Alliance Portfolio, as well as Brian Calderon. Welcome to the show, guys.
Thanks for having us. Thank you.
So Jim Perry is the founder and CEO of Alliance Portfolio, specializing in private money lending and trust deed investing. Gabrielle Gilles is also with Alliance, and she's the Vice President of Business Development. Brian Calderon is Director of Business Development for Accuplan Benefit Services, specializing in self-directed IRAs, which I'm very excited to hear about because that is a topic that so many people ask about, but really none of them know the ins and outs of it and the details. So I'm really looking forward to hearing what you have to say. Guys, let's first talk a little bit about what you guys do. So Jim, let's start with you. What is the core of your business?
Well, we're a direct private money lender, kind of a boutique investment organization. We offer secured investments, real estate-backed secured investments to individuals, to fractionalized investors, as well as mortgage funds.
So basically, that's just it's instead of a person going to the local bank and getting a loan, if they can't qualify for something like that, they would go to a company like yours, and then you guys have all these other investors that put their money in a fund or a pool, however you want to call it, and they play bank.
That's right. We market to the mortgage brokerage community and to realtors and to attorneys and CPAs for borrowers or property types that don't fit normal institutional underwriting guidelines. And these happen to a lot of people that won't qualify for a loan from the bank. They don't qualify for a number of reasons. Primarily, they are timing. They have to have the money by the end of the month or by the end of the week. In fact, we're helping close a lot of short sales in today's market where the bank will accept a short sale, but they will accept it under the condition that you close the transaction within a specific time frame. And a lot of times, institutional lenders cannot perform in that short time frame. We also loan to borrowers that are corporate entities or borrowers who are trust or LLCs and that type of thing. So there's a lot of different reasons why people borrow money from a private money lender like us. And then on the other side of the equation, we have investors who are sitting on money at 1% or less that are seeking to get a better return in today's market. And so we take in investment capital, and that money is secured by real estate from those borrowers, and those borrowers pay interest on those real estate loans just like from a bank, and that money is then converted to return to investors. And so that's what we've been doing. I've been doing it for 23 years, and we're very active and growing in today's market.
You know, obviously I love real estate, so I'm partial to it, but what a way to invest your money and, in my opinion, feel secure about it. Putting money into in my opinion, a low risk investment, because you don't lend on properties like banks do, such as an FHA loan with only 3.5% down. I mean, they have to put 35-40% down in order to get this loan. Yeah. So if anything goes wrong, you have a property with some equity in it.
Yeah. Our average loan to value is like 55% loan to value. So investing, there's a lot of different ways to invest in real estate. People can buy a home and live in it. They can buy properties, fix them up and flip them. They can invest in real estate investment trust. This is a real simple and passive way to invest in real estate, not have a lot of work. For instance, if you're a landlord, you have a lot of work that comes along with owning a rental property. You have a lot of work that comes along with fix and flips. Trustee investing, once you park your money, it pretty much just works for you. You let
everybody else manage the tough stuff, and you just collect your money. You do what the big boys do. You play bank.
That's right. And what we do is we create long-term investments that provide security, stability, predictability, and tranquility, sweet sleep.
Sure, I like it. Well, I'm gonna cut you off just a little bit because we're gonna get back to you towards the end and go over a lot of this stuff again, because I know you have some seminars coming up this year and a real educational process for a lot of the listeners that I'd like for them to listen more about. And Brian Calderon, tell me a little bit about what you do.
Yeah, Dino, thank you for having me. Basically, I work for a self-directed IRA custodian, and what that means is a person can actually get his 401k or IRA that's traditionally invested in mutual funds, stocks, or bonds. It can actually get those funds and invest in real estate-backed assets, alternative assets. And it does seem from a lot of my clients, there's a huge rush or drive for people investing in exactly what Jim was just saying at Alliance Portfolio. They are investing heavily in trust deeds because it's a source of capital, it's a source of income coming in with no maintenance. So some people will invest in real estate, but they have to find a renter, they have to find a fix and flip, or they have to do something to the property. With the trust deed investment, all they're doing is receiving interest income, and it's secured by a piece of real estate. So they are just playing the bank with their retirement account.
And in your situation, it's a retirement account. I mean, that money is growing every single month. You're collecting money from the trustee that you invested in, right? And only instead of you pocketing it, you're putting it into this other revenue source that's growing tax-free.
Exactly right. So again, their 401k or IRA actually makes this investment. So as interest payments come in, it goes back into their IRA, tax-deferred or tax-free if it's a Roth. Again, it's a huge rush, I think, that a lot of people are doing. And I do have quite a few clients that one client I have, he has about $6 million in his IRA, and he has about 50 trust deeds that he's receiving about $50,000 a month in interest income alone, still secured with no maintenance at all. So
Wow.
it's just growing every month, tax deferred.
Wow, that's impressive. Now, are there any tax penalties or anything that people need to be aware of? How does that work?
There's none at all. And a lot of people, first thing they'll think is, how can I do this, or is this legal? The answer is this: you've been able to do this since the early 1970s. Again, the rules have not changed. They've always been the same. And really what it seems like it's just conditioning. People think that their 401k or IRAs must be invested in mutual funds, stocks, or bonds. To the IRS, mutual funds, stocks, bonds, trust deeds, real estate, it's all the same. There's no difference. So there are no penalties, no tax consequences, nothing. It's just another vehicle for investment for their IRAs.
Let me ask you this though, and before I ask this question, because this is such great information. If you're listening right now, you're listening to Money Matters with Dino on KTLK AM1150. If you have any questions for myself or my guest today, call us at 888-814-3335. That's 888-814-3335, or you can check us out online at moneymatterswithdino.com. And we will also have the show up on YouTube as well, which will be on our website or Facebook, and you'll be able to hear all this in more detail if you miss any part of it. But Brian, I got a question for you. So I have a SEP IRA, and I have X amount of money in it, but I'm tired of where it's at, and I love trustee investing. Is there a way for me to convert that and put it into a self-directed IRA?
Absolutely. Again, self-direction is more just of a marketing tool, meaning all custodians and big brokerage houses could do the same thing. The difference is they're only going to allow you to invest in their product, such as their mutual funds, their stocks, their bonds. They will not allow you to invest outside because they don't make any money doing that. So if you come to someone like me, I don't have a product. The product is when you come to me, you're going to say, I want to roll my money into you. It's still a retirement account. I want to invest with Alliance and a trust deed. It's still a retirement account investment. There's no difference, no change. So no taxes, no penalties, no anything.
All right, I'm confused now. Here I am. I'm in the business, and I've talked to a few guys like you, and I've been told many times over that I can't take my current IRA and convert it and start investing in trust deeds. And then I've been told that you're only allowed to put a certain, like, I don't know, like $4,000 or $8,000 or something like that a year into a self-directed IRA.
Okay. Well, here's the answer: is if you currently have a SEP IRA somewhere, and it's in an IRA. It's not conversion. It's basically just rolling or transferring funds to another custodian. Just like if you're one of the brokerage houses saying, I want to go somewhere else, you're always allowed to do that without a tax consequence. Once your funds are with a custodian, let's say someone like me, and you want to invest in Alliance trust deeds, you definitely can do that. There's no difference. When you're talking about actually making an additional contribution to actually contribute more money to your retirement plan, then you might have limits. With a SEP IRA, you can contribute up to $49,000 per year, so quite a bit.
Right.
With the traditional IRA, the limit is $5,000 or $6,000 if you're over 50 years old. So there's limits in contributing. That has nothing to do with income, though, too. I've had a lot of clients say that, hey, I made this investment in a trust deed, but what if they pay me $12,000 a year in interest payments?
Yeah.
Am I limited? And the answer is no. Those are just earnings that your IRA is receiving. It's nothing to do with contributions.
Okay, Merrill Lynch, you just lost yourself a client. And Brian, you just gained a client. And Brian, another question on the self-directed IRAs. What other alternatives are there other than trust deed investments? Where else can you put your money?
That's a great question. And really the rule is this, and people, it's really hard for them to grasp it. The IRS set the rules, and they don't give us a list of approved investments. There's no such thing. What they do, though, is they give us a list of things you cannot invest in for everybody. It's the same across the board. And there's only 2 things on that list.
That sounds like the rules my wife gave me.
Exactly.
She doesn't tell me what I can do. She just tells me what I can't do.
But your list is probably a lot bigger than the IRS's. So with us, it's only 2 things you cannot invest in for everybody. And those 2 things are life insurance and collectibles. That's it. So for everyone's retirement account in the nation, those are the same rules.
What are collectibles considered?
Collectible cards, collectible wines, collectible rugs, collectible art. Anything else, anywhere else in the world, you can invest. And to the IRS, it's the same thing as a mutual fund, stock or bond, trust deed. They're all the same.
So on Facebook earlier in the week, when I introduced that you were going to be on the show, one of the people that were on it asked about gold.
Yes.
And how that works. So that's a viable option to convert and be able to invest in self-directed IRA.
Absolutely. You can invest in precious metals. There are some rules on precious metals because some metals actually are collectible metals. So as long as they're specific coins and bullion, there's no problem with that at all. And a lot of people do that also.
You're listening to Money Matters with Dino on KTLK AM1150. If you have any questions about your mortgage, current interest rates, or any of the programs that you hear out on the radio, but you want a real expert to answer them, or you have any questions for our guest that you hear today, call us at 888-814-3335. That's 888-814-3335, and let me help you. This is a very difficult market with all kinds of pitfalls for buyers and sellers. Therefore, my recommendation is Put together a team that really knows the industry, knows your market, understands your needs. If you would like some help putting that team together in your area, call me. It's 888-814-3335 or check us out online at moneymatterswithdino.com. We'll be right back after the break and continue our panel discussion with the experts. Meanwhile, think about how you can use this information to make yourself real estate wealthy. Stay with us. We'll be right back.
Alliance Portfolio is a licensed real estate broker. California DRE broker license 01868859, NMLS 324460.
Are you looking to diversify or add real estate secured investments to your portfolio? Did you know that investing in trust deeds can provide a better return with better security than many other alternate investments? For over 20 years, Alliance Portfolio has been providing the highest quality mortgage fund and trust deed investment opportunities with first-class service and communication. Alliance Portfolio offers well underwritten loans, low loan-to-value ratios, and all secured by prime Southern California coastal community real estate. At Alliance Portfolio, we don't just lend money, we lend our expertise. Call 949-349-1322 today and let us know that you heard us on the Dino and Nelson Show to capitalize on a special opportunity. That's 949-349-1322. Investors, when our job is done, your job is easy. Sit back and capitalize. 949-349-1322 or text the word Alliance to 313131.
When it comes to purchasing or refinancing your home, turn to someone with experience, CHL Mortgage. It doesn't matter if you're a first-time home buyer, purchasing the home of your dreams, or refinancing. The team of mortgage specialists at CHL Mortgage provide you with superior knowledge and service. Their ultimate goal? Getting the highest quality loan at low rates. Their second goal? To create a lasting relationship with every client and continue to provide excellent service for years to come. If you're looking to purchase or refinance, call the experts at 888-814-3335. That's 888-814-3335. Get additional details at www.chl.cc or call their office at 888-814-3335.
Welcome back to Money Matters with Dino on KTLK AM1150. If you have any questions for myself or my guests, or if you need help with your money matters, give us a call at 888-814-3335. That's 888-814-3335, or check us out online at moneymatterswithdino.com. This segment is brought to you by Citywide Home Loans, bringing you low rates, specials on closing costs, and exceptional service. So we're in the middle of our panel discussion with the experts, and if you're just tuning in, we're discussing private lending and investing, as well as self-directed IRAs. Of course, if you missed any part of the show, you can just go on YouTube and our channel, Phil, isn't our channel Power Players Radio, or you can just go online at moneymatterswithdino.com or even Facebook, and we'll have all our shows up over there as well. With us today is Jim Perry and Gabrielle Gilles from Alliance Portfolio, as well as Brian Calderon from Accuplan Benefit Investments. And we have a few more questions, and we just finished speaking to Brian a lot about the self-directed IRAs, but I want to bring it back to Jim a little bit, because a lot of the times when people use their self-directed IRAs, what they do is they want to invest in trust deed investments. Trust deed investments are basically when you put your money into a fund or even just a direct loan with a consumer, and you have that money secured by real estate. So you're in essence, you're playing bank. And what Jim specializes in is placing that money in really secured loans. And Jim, what I wanted to ask you was, as far as when people come to you with this money, they have a few options. They can put their money into a fund where they don't really, you manage it. They don't even think twice about it, and they just collect their interest on it. Or they can put it directly into a particular deal if they want by themselves. Is that correct?
Yeah, there's really three ways that investors can get into trust deed investments. One is a whole loan, and that's where one individual investor funds the loan themselves. So they have a mortgage secured against someone's property, and the interest and principal that comes from that loan is their return of their capital as well as their return of interest. Another way is to do a fractionalized loan. So say you got a $500,000 first trust deed secured by a property. You can invest $50,000 into that loan. You know, if I were to split it with you and I and Gabriella, maybe you can have 400, and Gabriella will have 99,000, and I'll have 1,000. But you can fractionalize loans as well, up to 10 people in any individual loan. And again, that is secured by one specific property with one specific borrower. The third way is to invest in mortgage funds. And mortgage funds are similar to a REIT or a mutual fund, whereby investors purchase shares of a fund, and that fund then buys a multitude of different trust deed investments. And all of those trust deeds provide a return to the fund, and then the fund distributes the cash flow to the investors either through cash distribution or through growth. Like the IRAs, for instance, I mean, you can invest in a fund and get growth, so your interest compounds.
And then you just keep using that money and it grows that much faster.
Yeah.
And you mentioned REITs. What is the difference between a mortgage fund and a REIT?
Well, primarily REITs are equity players. They're owners of real estate. So they buy, investors purchase shares of a REIT. That REIT then buys properties, income-producing properties generally. Where a mortgage fund, we're really not owners of anything. We are collectors of interest and fees, not collectors of real estate. So we don't have management.
And that goes back to what you were saying earlier, as well as the last time you were on the show. I was trying to pin you down one time saying, if you had to go buy something, what would you buy? Single family residence, units, condos, what would it be? And your answer, you would not answer. You're like, I don't manage properties. I just collect my money on the loans.
Yeah, I own one property and I live in it, and the rest of them I just loan on. I like, I already have a job. I don't need another one. I
love it. Now, Brian, let me get back to you for a second. On the self-directed IRAs, can you just basically have a checkbook and write checks to however you want to invest, or is it a little more detailed than that?
You do have that option, and what that's called an IRA-owned LLC. It's a little bit more complex than just the simple IRA that you'd open with me and we write the check for you. But you're definitely allowed to do that, which gives you complete checkbook control. And a lot of people like to go that route because they literally now have the checkbook to their IRA funds or retirement account, and they can make investments in trust deeds with Alliance and that type of investments.
Jim,
what a great option.
How many of your people that invest in the funds are using their self-directed IRA versus just cash?
Oh, probably 50% of them are are retirement funds. Yeah,
Is it really?
Yeah, because on the fund also you can get in at a low entry level. You can invest in the fund at $5,000. A whole trust deed, if it's $500,000 and you're going to buy that, you got to have $500,000. Or in a fractionalized trust deed, your minimum investment may be $25,000 or $50,000, and then again you're secured by that one specific property.
So I know you said 50%, which obviously you're in that business and that's what you go after. But I would say the majority of the people listening really just don't have any knowledge of this whatsoever and how it really works. And I know you're coming up with a seminar series that you're going to be doing throughout the year. I think your first one is next week, right?
Yeah, we are promoting this type of investment either through trust deeds, whole or fractional trust deeds, as well as mortgage funds. And so we're giving a season of what we call Learn to Earn a Better Return. And we're teaching people how to get involved in investing in this type of vehicle, real estate secured investment, passive, not a lot of work, very easy to understand. And the returns are very good compared to alternative investments.
And let me ask you this: what are the advantages? Why would somebody put their money in private money lending versus the stock market or any other avenue?
Well, trustees offer the combination, which is rare, a combination of a high return with a secured investment. The risks are identifiable. You know exactly what the risks are and how to cure any risk that comes along. Trustees are straightforward and easy understood. Most everybody identifies with mortgages. They have a mortgage on their house, and so what happens if you don't pay your mortgage? The bank's going to come and get your property. The difference is you are now the bank. you have loans or mortgages secured against real estate.
But the benefit of coming to Alliance Portfolio is that we manage that entire process for you. You act like the bank, but in a passive way. Alliance Portfolio handles everything. We're a full service.
And you guys mentioned earlier $5,000, and I know just from my own personal experience with my clients, I push this a lot because I'm such a big raving fan of trustee investments, but the majority of people think they can't get into it because they're not wealthy. They don't have enough disposable cash. But you mentioned earlier there's $5,000 was the minimum investment
into the mortgage funds. Yeah. So
realistically, if I had $5,000, I drop it in with you guys. You guys might pick a $500,000 loan that I'm a part of. But obviously, as an individual, I could never be a part of anything like that unless I was a part of this mortgage fund, because it's basically a bunch of people that are putting their money in together,
right?
And mitigating the risk, right?
That's right.
Yeah.
Yeah. You mitigate the risk through diversification. So you have multiple investors. Say you got a fund. I mean, just on a small side. Say you got a fund of $1 million, right? And then that fund holds 10 $100,000 first trust deeds. Well, you've just spread your risk amongst 10 individual investments. And so all of those provide a return back to the fund distributes. The good thing is that like with $5,000, you go with Brian in an IRA, and the funds offer the opportunity for growth. So you're not getting cash flow and then it's sitting at your custodian until it piles up. It can reinvest and you can compound your interest. And our funds are generating 6.5% to 6.75% net returns.
That's nice.
In a 1% world.
Right, absolutely. If you're in your car and you're listening, but you only heard a little bit of the show, I want you to go online at moneymatterswithdino.com or on our Facebook page, and we will have the show up. We're going to try and have it up directly after. Worst case scenario, the next day we usually have it done. And you'll be able to catch all of this great advice that our guests are talking about today. And if you have any questions for them, you can give us a call at 888-814-3335. That's 888-814-3335. Jim, a second ago you talked about the kind of returns that investors can make on this. What if they didn't want to? What if they had enough money? Let's say they had, $200,000-$300,000, and they didn't want to be a part of the fund. They wanted to invest in a particular trust deed. What kind of return can they expect then?
Somewhere between 8 and 10%. It really depends on the loan position. So if it's a first or a second trust deed.
So it is a little bit more if they decide to do it either individually or with one other person, for example, versus an entire fund.
That's correct. Yes.
It has a different risk. It does. You're tied specifically to that one particular trust deed with that one specific borrower. So the return is a little bit higher on the fund. The risk is mitigated. Like I mentioned, if you have 10 loans in the fund and one of them stops paying, 9 of them keep paying.
Got it.
If you're in an individual trust deed and that one stops paying, you stop getting paid.
Right.
So there's a little bit of different risk and so forth. But the other thing is that you get to pick exactly what it is that you want. And we're providing first trust deeds on properties up to like 60% loan to value, 65 maybe in today's world, that are returning 7 and 8% net returns. To get up into 10%, you're going to be in second position in today's world.
Brian, I got a question for you because we're going to be wrapping up the panel discussion here in a minute, and I want to get just a little bit more out of you because you are a wealth of knowledge, and we all know you like to talk now. Where does it matter? Is it state specific? Like, let's say somebody from Iowa is listening right now. Can they still invest with you and invest in properties down in California?
That's a great question, Dino. And the answer is absolutely they can. IRAs or retirement accounts are federal. They're not by state. So it's a federal rule. So I have clients across the nation who are investing in California properties, California trust deeds, so they can do it no matter where they're located at.
And with typical IRAs and 401ks and all that, if one needs to take the money out in an emergency, they can with obvious penalties. Is it the same thing with these self-directed IRAs? Is that possible?
Absolutely. And just again, so your listeners can understand, it still is an IRA. So the rules didn't change. The only thing they changed was they now can make additional investments, not just mutual funds, stocks, and bonds. So the answer is yes, there's no additional penalties, no additional taxes, nothing changed. It's still an IRA.
And I don't know if this applies, but I just recently, this past week, I had a client buying their first home. They're actually older, but it's their first home. Mm-hmm. And I know with 401ks, there's the law that states that if it's your first home, you can take the money out with no penalties if you're putting into the house. Does that law apply for these IRAs?
With an IRA, again, there's two ways you can pull money out from an IRA. Is you have to be 59 and a half. 59 and a half or older, and then you can actually take the money out without penalties. If you take it out anytime sooner, and for any reason, there will always be a 10% penalty.
Okay.
Ouch.
10%, huh?
10% penalty does hurt. But again, if people need it, we definitely tell them to find other sources of funds if they can prior to taking their retirement accounts out.
Guys, I want to thank you so much for being here today. Your knowledge and expertise that you've been able to give us was, I think, one of the most educational shows that we've had. Brian, thanks for coming on the show. And James and Gabriella, thank you again. But I don't want you guys to go anywhere because right after this break, we're gonna be asking you a few more questions. Right now, I want you to pick up your phone, your pen, and write down this number. Or I guess if you're driving, you can just pick up your phone and start dialing it in. It's 888-814-3335. That's 888-814-3335. And if you have any questions for what you heard today from either myself or my guests, you can call us, you can email us, you can get us online. We're available everywhere. It's moneymatterswithdino.com, and we're on YouTube as well, Power Players Radio. Stick around after the break. We're going to be talking to James and Gabriella, and then we're going to be doing the Ask Dino segment where, again, a wealth of knowledge with the questions that you as the listener have asked us this past week. We'll be right back.
When it comes to purchasing or refinancing your home, turn to someone with experience, CHL Mortgage. It doesn't matter if you're a first-time home buyer, purchasing the home of your dreams, or refinancing. The team of mortgage specialists at CHL Mortgage provide you with superior knowledge and service. Their ultimate goal? Getting the highest quality loan at low rates. Their second goal? To create a lasting relationship with every client and continue to provide excellent service for years to come. If you're looking to purchase or refinance, call the experts at 888-814-3335. That's 888-814-3335. Get additional details at www.chl.cc or call their office at 888-814-3335.
Alliance Portfolio is a licensed real estate broker. California DRE broker license 01868859, NMLS 324460.
Are you looking to diversify or add real estate secured investments to your portfolio? Did you know that investing in trust deeds can provide a better return with better security than many other alternate investments? For over 20 years, Alliance Portfolio has been providing the highest quality mortgage fund and trust deed investment opportunities with first-class service and communication. Alliance Portfolio offers well underwritten loans, low loan-to-value ratios, and all secured by prime Southern California coastal community real estate. At Alliance Portfolio, we don't just lend money, we lend our expertise. Call 949-349-1322 today and let us know that you heard us on the Dino and Nelson Show to capitalize on a special opportunity. That's 949-349-1322. Investors, when our job is done, your job is easy. Sit back and capitalize. 949-349-1322 or text the word Alliance to 313131.
Thank you for hanging with us. This is Money Matters with Dino on KTLK AM1150. I'm your host, Dino Katsiametis, and I'm here to give you the tools and information to build a secure and strong portfolio with real estate. If you have any questions or you want to get a hold of myself or my guests, call us at 888-814-3335. That's 888-814-3335, or check us out online at moneymatterswithdino.com. Jim, I'm so glad you're here again. And, you know, I typically have a guest on once, maybe twice a year, but every single time you come on, the phones blow up and everybody seems to be calling me about how to get in touch with you the following week instead of, you know, doing loans with me. So so I am bringing you back, though, because I love educating the listener out there. And I want to find out, assume I have $100,000 right now. And I don't know where to put it. So I come to you and I want to have a little more control over where my money's going. I like you. I trust you. Your resume is there, but it is real estate, and I have certain criteria. But before I go into what my criteria is, I want to know what your business philosophy is. What's your criteria? Either you or Gabriella.
We lend primarily on real estate in Orange County, coastal LA, and San Diego County. So our borrowers we prefer those types of properties. We lend somewhere between 60 to 65% loan to value, or loan to purchase price.
And for those of you that heard that and don't know what that means when she says 60% loan to value, that means there's 40% equity in the property.
Correct.
So this way, if anything goes wrong, you're taking over a property with a lot of equity, and that way, that's why they call it a secure investment.
Yes, that's correct.
And so I know from experience, because I've been working with you guys for several years now, and when my clients call and need a loan that I can't get qualified at the actual institutional bank, I call you. And obviously, I'm trying to push my loans all the time because they're my clients. And I got to say, with these guys, they jump all over and fund in record time anything that has to do with coastal communities or top-notch properties or anything like that deal we did in right around Christmas time in Costa Mesa.
Costa Mesa, yeah.
And then, I don't know, like 2 weeks later, I called you for some loan in LA, and you shined me like the redheaded stepchild that I was. You didn't want to have anything to do with it.
Well, we're specific about the types of properties and the types of deals that we're after. Like Gabrielle mentioned, we're Orange County, coastal Los Angeles, and San Diego counties, and we're really looking for the best properties that provide the greatest security and the most likelihood of success. We're not interested in owning properties. So like you say, if there's 35, 40% equity, that borrower has a lot of skin in the game. And as a result, we don't end up owning these types of properties.
Not only are you the CEO of Alliance Portfolio, and you've been in this for, 50, 100 years or something like that now, but you're also known as an educator.
Yes.
Right? And you're holding these seminars, obviously to meet the right people, but to educate them on what this business is and what they can expect. And tell us a little bit about the seminars you're holding this year.
Well, we are doing what we call Learn to Earn a Better Return. We're teaching specifically about trust deeds, the components of trust deeds, the components of mortgage funds and how they work. A few years ago, I authored a continuing education class for the financial planner organizations, and we taught high yield, non-correlated investments, and that's a real fancy way to say trust deed and mortgage fund investments. So I've kind of taken a kind of a complex class to a very specific group of people and made it simple. Kind of created it in simple terms and easy to understand presentations. So we'll be having presentations every month on generally the third Thursday and third Saturday of each month. We do 2 of them on Thursday night at 6 and 7:30, and then 3 of them on Saturdays at 10 a.m. and 2 and 4:30 p.m. at hotels from Laguna Hills to Woodland Hills and everywhere in between, educating people on how they can get involved in this type of thing and how it might be a good opportunity to place some investment capital.
And Dino, your listeners can actually find the advertisement for our seminars in the LA Times and the OC Register this coming Sunday, because our first presentation will be on the 21st.
And I have this up on my website as well, moneymatterswithdino.com. Right on the very front page there on the homepage, there's a tab that has Alliance Portfolio. Just click on it. It has all their information. It has their website and anything you might want to know. But I urge you to go to this seminar. This is not one of those things that you go and you waste your time on. This is a educational seminar that is going to make you real estate wealthy. So Jim, Gabriella, thank you so much for coming to the show. And hopefully we'll have you back here in the next couple months.
Thanks for having us.
Thanks
we appreciate
so much.
it. We'll see you at the seminar.
I'm going to be there. Not for all 3 on that one day, but I'm going to be at the one. So if you have any questions for me while I'm there too, I will be available for you. Questions or concerns, call me at 888-814-3335. That's 888-814-3335. Now on to our famous Ask Dino segment.
It's
Phil,
famous
I
already.
know you got a lot of questions for me, and we don't have a lot of time, so go.
All right.
I have a jumbo mortgage with 3 years remaining on a rate that is fixed for 10 years with another 20 years remaining on the loan after that. It is a relatively low rate for now. Is it better to ride it out for the next 3 years and then see what is available, or should I refinance now for 20 to 25 years?
Gosh, great question. Yeah, long one. Great question. I don't have a crystal ball, but do yourself a favor, go to Vegas. Put it all down on black. If you win, then let the adjustable rate ride as well.
That is the worst advice I've ever heard in my life.
If you lose, then refi because things aren't going your way. In other words, it's the same as going to Vegas and putting it all in black. You don't know what's going to happen. So in my opinion, just be conservative, refinance now, take the insurance basically. And because one way or another, it's going up. It's not going to continue to go down. So
right.
Either write it out for another year and risk the upcoming swing, or play it safe now.
I would.
If it's your home, this is where you live. I mean, come on, play it safe.
There you go. I would love to refi now, but I am unemployed. Our loan-to-value ratio is small, and I have cash reserves. Can I get another loan?
Chances are very, very slim if you want to go to a big institutional bank and get a 3-something% interest rate. But if you're okay with private money lending, then yes, Alliance Portfolio, as long as it's in a good area, will absolutely do the loan.
I bought my house in July 2009 for $285,000 with an interest rate of 5.4%. I tried to refinance, and the appraisal came in at $263,000. Is there anything I can do to challenge the assessment value? If not, what can I do?
So
I love that question, by the way.
With all of the new appraisal laws that are out there, they really limit the loan officer, the borrower, everybody, and you're kind of stuck. However, what I've done is, so now these big appraisal management companies, they have 200, 300, 500 appraisers sometimes. It's the luck of the draw. You don't know who you're going to get. You might get a guy that has to drive an hour to come down to where your house is. So he doesn't even know the neighborhood. And where I hang my hat with Citywide Home Loans, we follow all the laws, but instead of having 500 appraisers on this massive list, we have 5. And they're 5 very intelligent and good appraisers that actually do their job. So the majority of the times, I'd say call me because my appraisers will appraise the house for what it's really worth.
Nice. Are stated income loans available again?
Yes and no.
Right.
There are a few places that have them. Private money lenders, like Alliance Portfolio, for example, does. I think they call it something else, though.
Wow.
They get around it.
Yeah.
But it's logical, though. Yeah. For example, with Alliance, what they do is they have they say, show me 12 months worth of bank statements. Let's see what kind of deposits you have. And because there's a lot of self-employed people that the way they do taxes, they just don't show that they have earned income that they're paying taxes on. But by all means, they have X amount of money coming in every month. They can still pay the bill. So logic says if you're putting enough money down and you have them coming through the account, you have money in the bank, my gosh, give the guy a loan.
At this point, it's basically self-employed wealthy people, right?
Yeah,
or people with money anyway.
The stated income, also known as liar's loans, though, that whole thing, absolutely, it was a mess. That was because they were giving people with a 580 credit score, no money down, who worked at McDonald's, and they were giving them a $600,000 house. I mean, that's stupid. Yeah, 100% loan to value. That's just stupid.
Yep. Okay, I am in the process of consolidating my student loans and would like to purchase my first home. Will having student loans be a deterrent to obtaining a mortgage loan?
First, I'm going to go ahead and say, just because I do a lot of doctors and attorneys and all that, my goodness, the kind of money you guys have spent going to school. Unbelievable. So the answer is, if you got $100,000 in student loans, yeah, that'd be a disaster. $45,000. Listen, at the end of the day, it's a matter of what your debt ratio is. So whatever your payment is what really matters, not how much you owe. And basically be counted against you if you meet the guidelines and you fall within those guidelines and your debt ratio is within reason, you'll still get the loan. Well, that's the end of our show today, and you're listening to Money Matters with Dino on KTLK AM1150. If you have any questions about anything you heard on the show today, don't wait. Pick up the phone and get the answers you need. We're here to help. Call 888-814-3335. That's 888-814-3335, or you can find us online at Money Matters with Dino. And, we want to be your tremendous resource. So call us, Facebook us, email us, do whatever you want, but don't waste time. Call us, because we will put you in touch with a the right people to help you. Thanks to my expert panelists this week from Alliance Portfolio, Jim Perry and Gabrielle Gilles, and from Accuplan Benefit Services, Brian Calderon. Also, a big thanks to my producer, Phil, for all the hard work you do on the show. A very special thanks goes out to you, the listener, and sending in your questions for the Ask Dino segment. You're the reason I come on air every week. I love doing the show, and I truly hope you get as much out of it as I do. We're here every Saturday from noon to 1 on KTLK AM1150. If you missed any part of the show and would like to hear it online, just go to moneymatterswithdino.com or our Facebook page or even YouTube. Thank you for listening, and remember, your future is up to you. Bye for now.
When it comes to purchasing or refinancing your home, turn to someone with experience, CHL Mortgage. It doesn't matter if you're a first-time home buyer, purchasing the home of your dreams, or refinancing. The team of mortgage specialists at CHL Mortgage provide you with superior knowledge and service. Their ultimate goal? Getting the highest quality loan at low rates. Their second goal? To create a lasting relationship with every client and continue to provide excellent service for years to come. If you're looking to purchase or refinance, call the experts at 888-814-3335. That's 888-814-3335. Get additional details at www.chl.cc or call their office at 888-814-3335.